Hey everyone, this has been a tough day, evidently for the internet and for our computers. So we've lost Adam. He's reconnected now. Here we go.
Yeah, a lot of people on Zoom. So I don't know where I got lost there, but the other conflicting guidance is if I pay somebody $150,000, do I subtract off the 50 and then run through a bunch of mumbo jumbo calculations? So I would go with what we did in the example that's on the YouTube posting from last night, because it provides you the flexibility to alter the number depending on what your depending on the guidance that comes out between this minute and tomorrow morning when you can first do your submissions into a bank. So again, we don't know, but I would run with our calculation for now. At the end of the day, on what we're hearing from the banks as of right now is that it doesn't necessarily matter what you put on the application itself. So you're kind of doing your best swag at this, and assumingly the information that you provide them will allow them to do their own calculation that they will then base their funding decision on. So you're going to say, here's what I think it is. They're going to say, thank you for all this information. We're going to do the analysis on it and then give you an answer back of what you can actually get. So how they're going to have the manpower to do that, I have not heard yet from, and I've talked to just about every major bank in town now. They're all scratching their heads around how they're actually going to process all these requests and get funding requests back. So I think what we're going to do for the people that we're helping and for our own application is we're going to follow the calculation that was on the YouTube video last night that I just explained here, and then be ready to go with either a gross wage number or a net wage number, depending on what our own bank's interpretation of the rulemaking is. And ultimately, they're going to be responsible for calculating the forgiveness on the backside. So you really, you think about your worst case scenario here is you got a little bit more money than you were supposed to based on interpretation, and you're left with some debt, versus the other way around, which would be I didn't get enough money that I could have gotten. So we're going to calculate it both ways and be ready to go and probably submit the larger number, even though I think it's technically incorrect, pending further guidance, and then let our bank knock it down based on whatever analysis they do internally. We haven't heard from any bank yet around, there is the ability for third parties to do the whole request and verification process. We haven't heard from any bank that said, hey, we really want to do that. BGW, you run with it yet. You run with this, but we're hoping that'll happen soon. I think if I'm thinking through time frame, I think what'll probably happen is that, we'll all apply on Friday. The bank will get some sort of guidance or form some internal team, and then they're going to come back to us and say, hey, will you have your CPA verify this? Or will you have, whatever, do something with this? So again, we're all just kind of figuring out as we go.
Hey, while you're talking about that, one of the questions also came from Jim about in the spreadsheet calculating 333,333 available, you deduct the excess of 8333 twice. Can you explain why?
So can you repeat the question again?
Yeah, it says in your spreadsheet, when calculating the 333,333 available.
Oh yeah, okay. So remember there were three scenarios in that spreadsheet, and that was really driven more for what do I got to do, and also remember that I try to keep the math simple. So the reason that 8333 is in there twice is that in my model for that, I had 4 people making over $150,000. So that 8333 represented the excess per month of those guys collectively. And then I had 20 people making $75,000. And when I did the calculation of what would be removed by the correct calculation, it also just happened to be 8333. But it conceivably would be a different amount if I didn't have 20 people all making exactly the same amount. I was just trying to keep it simple on myself.
Okay, and the final question on that one is, I've seen that we still owe accrued interest even if the loan is completely forgiven. Is that true?
I don't know the answer to that other than it says the interest accrues and that the balance is the forgiveness can't exceed the principal balance. So that would imply that you're going to still owe the interest at the end of it, but they also reduce the rate down to 0.5%. So
yeah,
it would be 0.5% divided by 12 times 2 times your amount, really is going to be the amount that would still be sitting out there if the entire thing was forgiven.
Next question, will DES North Carolina contact the employer regarding every individual unemployment claim? If so, how do they contact us? Phone, mail, email?
I haven't received I haven't seen any guidance on what they're going to do on the unemployment claim side, but I would suspect that they're not going to do anything since part of the CARE Act, and then also part of the guidance, part of what Governor Cooper put into place is that, hey, we're not going to ask a whole bunch of questions about unemployment. So, I really don't think that there's going to be a lot of inspection on that in this time frame, because, it's first off, it's supposed to be expedited to where you get it almost immediately. So that would imply that there's no way they're going to have an answer back from you in that time frame. Secondly, it applies to part-time workers that you're still employing. So I don't know how they'd have to ask you, are they really only part-time or not? And third, if someone quits because they don't feel, safe, or you actually took this as an opportunity to fire somebody for cause, again, it doesn't matter, because they pretty much waived all the rules for which you could apply for unemployment. So I guess in theory, someone could be very abusive of that. But I haven't seen any guidance where they're actually going to contact people. I don't even see how that would be administratively feasible. They might, but I can't believe that they will, given that the funds are supposed to get out, literally a week after somebody makes the application.
Here's another one. This is actually from a hotel owner. Does PPP exclude seasonal or part-time employees, where a hotel with 5 full-time year-round employees, but up to 10 employees for 8 months, those other employees cannot be used for the PPP calculations? ? Please let us know.
I think it probably would depend on what you're trying to accomplish in terms of what you're submitting. The guidance around seasonal workers is very specific to the time period that we're in right now. So, if, for example, your season was in the fall, the current guidance wouldn't have anything to say about that, other than, you could include them, or you could take a position to not include them, given that there's, given that there's exceptions for seasonal employees, but it really is supposed to just apply for this time frame. So I think what I would probably do, unless I was trying to accomplish something different, is I just would look at what really was my historic payroll at this level. And if it included seasonal employees, I probably would include them in the calculation. If it didn't, then I wouldn't. And if my seasonal employees were later on down the road, like sometime in the fall, I might consider including them, but you also will run the risk that you're going to have debt at the end, because you will, combination of probably not spent that much money on payroll to be forgiven if you wouldn't have employed them now normally anyway. And then secondly, your head count's going to be wrong unless you figured out a way to hire them by June 30th, even if that was ahead of your season.
From the same group, it was my understanding that we could do PPP or EIDL, but not both. Is that correct? And in that case, would it be better to obtain PPP and then do EIDL?
Yeah, so there's been a lot of confusion around that as well, and we had a question that came in about EIDL and PPP as well. So here was the thought process. The thought process was, we have a platform ready to go today, which was EIDL through the SBA website, that can provide immediate assistance. So, version 1 was a horrible application process that people submitted information to, but it took a long time to submit, and that included BGW. Then the website crashed. Then they launched the new website right at about the same time that the CARES Act passed, which contained information on the Paycheck Protection Program, and then also with respect to EIDL, talked about the fact that the first $10,000 was just going to be a grant, free to you. The remaining, 1.99 million, if you went to the max amount, would still be a loan to you. So if that got in your hands and that funding decision was based on covering your payroll expenses, then you could refinance all that through the Paycheck Protection Program, and then the money would be forgiven. So your bank takes you through PPP, they pay off EIDL, and then now you're with PPP and you're using the funds to cover payroll. So where the rub is the double dipping. So if I got EIDL funds, I'm not supposed to get PPP funds for the same funds. The PPP funds would go to pay off the EIDL funds. So what's really hard about all this is that if you had done an application for EIDL, then the guy on the old way, the guidance was, hey, we encourage you to resubmit, because that's the only way you're going to get your 10 grand is if you resubmit. We chose not to resubmit because there's been a little bit more guidance around, hey, if you've already got an application pending in EIDL, you can apply for the Paycheck Protection Program. I don't know how they're going to verify that. And considering that the application process starts right now or tomorrow for the Paycheck Protection Program, and assuming that funds will be made available because banks are going to be a lot more efficient than the SBA, I just think that every time PPP is going to be faster than EIDL. So what I think will probably happen is that your bank's just going to say, you know what, did you apply? Yeah, I did. All right, then you can't take that loan if it's given to you. Or they may take a hard approach. I don't know. I'm pretty optimistic that they're going to take hey, we're going to go ahead and make the decision, but you need to sign this document saying that you're not going to take funds if offered for this same purpose. So my current thinking is that if by the grace of God, the SBA got back to me before the bank did, I'd think about it, but it's likely that they won't. So instead, what I would consider doing is using the Paycheck Protection Program for this period, which is 8 weeks from the point of funding, which assume would be middle of April or May through middle of June or end of June. That's one window. Then you can still do EIDL after that, because now you're in a whole different time frame. So the sequence that I would follow would be, if I haven't done anything, would be PPP first, then EIDL once my 8 weeks had passed and I'd already gotten my submission in for loan forgiveness, because you can do EIDL up until December 31st. So if you still needed, now that's a loan. So I mean, you'd only want to take it if you still really needed it. You can't use it to refinance debt or anything like that. So it's really going to be for people who are up the creek without a paddle, I think, at that point, that are still trying to hang on. But that would be the sequence that I would take. If I've already done the EIDL application, like, I know it's kind of, I would be very clear that I have not heard anything back from my bank, and that I'm not going to take any funding if they happen to call, if your bank even asks the question, because the application only says, I promise that I don't have, I don't have a loan pending for the Paycheck Protection Program for the same purpose. And I can't believe it, you know, if you're a really good relationship with the bank, I can't believe that they're going to say, hey, no, we're not going to help you in this time of crisis, because, you know, assumingly you got debt outstanding with them that they want to get paid.
Here's another PPP question. We laid off employees starting March 21. I understand we can obtain PPP and use for payroll, rent, utilities that and have that forgiven eventually. I thought we had to rehire immediately after we received the funds. From the webinar, it seems like the deadline to rehire would be July 1, 2020. Can we wait to rehire? If that's the case, can we wait to rehire? That would let the employees receive the state unemployment plus the extra $600 for as long as possible. That would allow basically the employees to be better off than what their current wages would be.
Yeah, so the way the law reads is, you know, it literally could be the stroke of midnight, 6:30. So it's actually 6:30, not 7/1. So what you're going to have to calculate is, you know, if I got $500,000, I still need to spend 75% of $500,000 on payroll for 8 weeks. And somehow I have to have the same average FTE count sitting there at the end. So you're just going to have to do some math on, all right, when would I start bringing people back to meet that 75% of $500,000 number to maximize the forgiveness amount, unless for whatever reason you wanted to turn it into debt. But again, the problem with the debt as it's structured right now is that the current guidance is it's not 10 years, it's 2-year amortization period. So you're going to be stuck with a pretty fast payback time frame on a lot of money.
Any insight on how portfolio companies or private equity groups are going to be viewed under the affiliate disqualification?
Yeah, they're all pissed off about that. What I would suspect will happen is that at some point in the future, there's going to be some more guidance around this being location specific, because within the Family and Medical Leave Act, with the stuff that passed prior to this, the waiver on the affiliation rules basically came down to, you know, hey, let's follow FMLA, which basically says, even if you're an affiliation, as long as you don't have over 500 employees within a 75-mile radius of each other, then that can count as a standalone entity for this purpose. So I would see something like that happening, hopefully in the future, you know, unless for whatever reason, you know, they're thinking, hey, we just don't want to make private equity guys rich off this loan forgiveness. But right now, what you would have to do under the current guidance is to request a waiver or an analysis of the affiliation rules to get it waived. So again, I probably would still apply, because the worst thing that's going to happen is the bank's just going to turn you down. So I would still consider giving it a shot. All that said, I'm thinking through the application right now. I don't have it in front of me, but anybody that's over 20% is supposed to, provide an assertion that, they're not a criminal and a few other items. And I can't recall if that could be a company or it had to be an individual. So I probably would still apply and then let the bank turn you down at some point. Or if it turns out that hey, you got the money, but it's not going to be forgiven because of the affiliation rules, you just be stuck in a position of having to figure out how to pay it back.
So when you had some internet connectivity issues and you were trying to do that spreadsheet, I have a feeling that's what you were trying to do, but we'll probably have to edit that part out just because we had about a minute and a half or so of no audio and everything was frozen. But so here's the statement. And then the question. So the data you guys sent around yesterday is great, especially the Excel spreadsheet. But even with it, there's still general confusion and uncertainty regarding how it should be populated and ultimately what our final number should consist of for purposes of applying the 2.5 multiple. It'd be awesome if we could see the calculation explained or even done live, as that is the last piece of the puzzle for most of us, except for the bank component.
Yeah. Let me see if I can bring it back up again, since we seem to have some stability now. I was a bozo. I should have saved this locally, as I had in all the other webinars. I thought I was I figured out how to do this. Okay, so let me go ahead and share my screen. Okay, so this is supposed to be the technically correct version of the calculation based on our interpretation and also the Chamber of Commerce interpretation, with one exception, which I'll point out. So the calculation, I did this on a quarterly basis because really it's supposed to be a monthly average, but I figured quarterly is pretty darn close. You could probably figure out a way to do this on an annualized basis if you wanted to, because and just get as close as you can, especially if your bank is on the verification. It's going to do the verification themselves. So I try to do enough of a mix of stuff that you would, this is pretty much going to represent every scenario I think you'd come across. So what I do is I start with salary, which is $62,500. My status, I've got a full-time person that's going to come in later. So for my full-time people, I'm putting how many weeks did I work from my SUTA wage statement. So in your SUTA report, state unemployment tax, payroll tax filings, you've got the summary report that gets filed, and then you've got a backup report that includes every single employee, what they were paid, and how many weeks they worked in that quarter. So in this scenario, I made poor Luke, we canned him. So he was only 10 weeks out of the year in first quarter 2019. Sorry, Luke. And I also wanted to have a good distribution of salary range here so we can see the calculation. So I've got some hourly folks where all this is going to come into place in terms of calculating how many FTEs I have for this quarter. And then I got Greg Olson here, who's a part-timer. Now that guy was not a part-timer when he played for us. All right, so here I've got my federal withholding, which is going to be from my payroll report, because that doesn't exist anywhere on any document other than a year-end W-2. So this is going to have to come from your internal systems to get it on a by employee basis. I've got my FICA for the quarter, which is also going to come from your payroll reports, because again, that doesn't exist on anywhere on a filing other than in the year-end W-2. I'm going to have my health insurance that I provided, which is going to come from your monthly bills. It could be that your health insurance provider would break this down to you on a quarterly or maybe an annual basis. But I would have done this by adding up each month, what did I give to this person? And same thing on the employer match side of the 401k. If you have that, that's going to come from the sum of your monthly submissions on behalf of this employee for the quarter. The SUTA number, this isn't correct in the sense that, but I also felt that it was de minimis enough in its incorrectness that it wasn't really going to matter for this purpose. Like it wouldn't have swung it too much one way or the other. So this calculation is just simply saying, what's the max SUTA rate? Because, as long as everybody in North Carolina, at least, as long as everybody's making over 22,500, they're going to max out SUTA anyway. So you could alter this if you wanted to, but the way this calculation is set up is just to get to the max SUTA number over the period of the 4 quarters. Technically you could have maxed earlier. Like Cam technically would have maxed in this quarter, and then there wouldn't have been a SUTA calculation on him going forward. But I didn't play with it enough to see what kind of a difference that made, and I don't think it would have changed my answer too much. So we got annual payroll costs here, which is, as you can see, the sum of the wage minus federal withholding minus FICA plus health insurance plus 401k plus SUTA. So clearly that is over $100,000. So I have a formula here, which is just basically saying that for the quarter, if L is greater than $100,000, use 25. Otherwise, use the number. That creates the $100,000 annualized wage number that's here to be my payroll number. So what you see from this is that this is my annualized payroll cost for the calculation. What's excluded is around $20,000. When we get here into the FT calculation, I'm basically looking at, for full-time salaried employees, how many weeks did they work relative to how many weeks were in the quarter. So that's going to allow me to get to my part-time equivalents from either people that left my company or for this purpose. So, Cam, he was here for the full 13 weeks. Greg was not. And then I'm trying to remember who this was. Oh yeah, Ron, Riverboat Ron. He was here the full time too. So I got my full timers figured out. Now I need to figure out my hourlies. So for the hourlies, that calculation is down here, and there's different business days per quarter. I did not know that until I did a date calculation. So there's 512 hours that someone could have worked in the first quarter. Christian, he busted his butt. He worked 600. Stefan, he was kind of lazy, part-timer. He did not bust his butt, so he's a part-timer. So the calculation is basically if what they worked divided by what they could possibly have worked is greater than 1, then it's just 1 FTE. Otherwise, it's part-time. And then, same concept applies for the quarterly people as well. So, the part-time salary people as well. So I now have all my variables. So if I come down here, my average FTEs is just the sum of those numbers that I just showed you. And then the average wages, I'll reduce this so you can see where it's going. The average wages is just taking my calculated PPP wages divided by 12 to get to the average for the month for this quarter. And that's pretty darn close to how you would perform the calculation by letter of the law. So the only variances that are out there right now are, first off, is this number included or not? The law reads to take it out. The guidance from the Treasury Department just says salaries. It doesn't say what you're supposed to do with this. So that would imply that it's actually in, even though the law says that it's out. So they got to figure that out. But pending further guidance, we're going to run with including it, but I want to have it out here for the purposes of knowing what the answer might be for the purposes of my own planning. The only other thing that's out, or that varies a bit, this versus the chamber and the law, which isn't really clear. Do I start here and take this down to $100,000 annualized and then perform some calculations, or do I do it like I did here? I haven't really played with it to see if you would arrive with a different answer either way. So this is the way that I interpret it, just based on the law, but that might be a different story. So then when you get to summary loan, we do this for each quarter. So, as you can see, I added Thomas Davis this quarter. Love that guy. And in quarter 4, I had, ramped up and added Ted Williams as well, even though he's dead. So then you get to your summary numbers, which I've done here. So I've done the average for each quarter to then get to my monthly average over here. Same thing with my average FTE. So whether you do 2.5 or do it like the latest guidance from the Treasury Department and SBA says, which is 8 weeks plus 25%, it's the same answer. So I just did it like the SBA has, which is, 2 times my payroll. So that times 2. And then 25% of that number gives me a max loan amount of $55,279. So the 2 things that I'm really looking to keep my eye on are, first off, to maximize the forgiveness and not have any debt, that I need to spend that on payroll. This 11,000 is the most that I can spend on non-payroll approved expenses, which are the rent and the utilities. And then by June 30th, I need to be there from an FTE count perspective. So, again, I did this on a quarterly by employee basis. We've got the team right now playing around with, could you get to the same answer or pretty close to the same answer from annualized information, because they all thought that my spreadsheet was a science project. But this is, from what I know today, this is the technically correct way to calculate what you are requesting. And again, the only change that I would make to this would be that I would go ahead and add in the withholding into the amount that I requested, which is really only going to impact, these guys that are making less than $100,000. It's going to boost up my potential loan amount. Again, pending further guidance. So what'll end up happening is, you'll submit the request, and then the bank, supposedly, unless they rely on a third party to do their verification, will do their own calculations, because they're all requesting the same information that I just presented here, and then tell you what you're actually going to get. And then, you would have to then at the very end of this, submit the same information for the 8 weeks to then get the amount that's going to be forgiven.
Okay, so it is 11:45. We've got about 20 more questions coming in.
Sure. Yeah,
so
we can go as long as we need
okay,
to.
cool.
You just have to apologize to Carrie at Torrent, because I'm going to run late for our call.
Okay. I'll send her a text. So here's the question. I'm the owner of an S Corp. I have a minimal W-2 payroll, but distributions of $50K in 2019, $20K in Q1 of 2020. My understanding is these amounts can be retroactively reclassified as payroll. Is that the right approach, or do you think there's a better option? Alternatively, well, go ahead and answer that.
Go ahead and finish the question. I'm sorry.
Okay. I can probably pay myself a large lump sum now and then presumably just refile my Q1 filings, but that's less preferable for cash flow reasons. Assuming refiling and reclassifying my distributions as payroll is an option, how do I do that? And is it something that I need to do with our payroll provider?
It would be something that you would do with your payroll provider. So what you'd have to look at in that case, your test period is the calendar year 2019 or 3/31 through 2/29 of this year for the purposes of performing your calculation. So if you were going to fix the wage amount, it would have had to have occurred in the first quarter. What you'd have to balance would be the additional taxes that you're going to have to submit associated with that versus what you would have gotten if you just let things stand. Now, all of that said, if you'd gone to distributions like we had advised early on to preserve cash flow, I definitely want everybody back on payroll once they get funding, because you want to maximize that forgiveness amount. Even if you're just doing net payrolls and not submitting the taxes until you absolutely have to reserve cash flow, I would definitely have yourself on payroll for the 8-week period to even if that ended up being 100% of your total loan amount that you use for it. But if you're going to try to go back and fix it, remember you're still capped at 100 grand. So don't know what you made, but you're still capped at 100 grand. And then secondly, it would probably be pretty difficult to get someone to do the reclass of 2019. You could, but you'd have to amend all your payroll tax returns and your W-2 and W-3 and then resubmit it.
Just to clarify, you had said that if you didn't use 2019, you could do, and I think you said 3/31. I think you meant 12/31 through 2/29. Is that correct? Or
no, it's so that the way it reads now is you can either use, this is assuming you're not seasonal, you can either use the calendar year 2019 or you can do a rolling 12 through 2000 and through February of 2020. So you would, obviously do whatever you think is going to be better for yourself. For new companies that weren't in business, you have the option of using 1/1 through February. But the other place where that comes into place from an FTE count perspective, though, is the way the law reads now. On the forgiveness side, you can also elect to use 1/1 2020 through February 2020 for the purposes of calculating your average payroll and FTE count for the purposes of the forgiveness analysis.
All right, cool.
And I got just related to that, we just got a chat in from Robert.
Yeah.
So, the law read rolling 12 months from the point of receipt of the funds, but the guidance from the Treasury and the SBA further clarified and said calendar year or rolling 12 through February. So that's where that came into place. You were correct that originally it was rolling 12 period, but the last guidance has it calendar year, or rolling 12 through February.
Okay, and we may have addressed some of this, and if we have, go ahead and just say we covered it. But this is from Joe. How are owners who are not paid via payroll nor as 1099s factored into the payroll costs for PPP program? I believe they can be included, but guidance is to collect 94 times payroll tax reports, payroll reports, and 1099s for 2019.
Yeah. So the two things that are not clear currently, Joe, because we're in the same boat as you guys are, that I don't get, we're a partnership, we're taxed as a partnership. So I get a K-1, I don't get a paycheck. So I think we've got two routes to go. And so I'm just going to tell you what we're going to do. So the way that it reads now is it's all employer wage related for the application process. So what it was silent on were, people like us that just get a K-1 that don't get a W-2. And it said that self-employment applications can come later because we're technically self-employed, even though we're part of a company and a partnership in the eyes of the IRS. So here's what we're going to do. We are going to go ahead and include ourselves in our request and just have a discussion with the bank. And the bank is going to say, but you still have to run through the same calculation that you did here. The bank is going to say one of three things. One is, sounds great. Two is, no, do a second application when the self-employed guidance comes out, and then we'll roll these things together, or keep them separate, whatever. Or three, you're SOL. I don't know what the answer is going to be on that, but that's the route that we're going to go. On the independent contractor side, I always thought that might have been just a mess up on the part of the law, because that was just flat out double dipping. So on the independent contractor side, the current application is for wages again, and so it doesn't include independent contractors at this point. And then it says guidance will be coming for the self-employed and the gig economy, all that kind of stuff. So the double dipping on the independent contractor is that if Gary was a 1099 and I paid him, if I was getting money, and at the same time Gary turned around and did the application for himself and he's getting money, we both got money for the same thing. So I'm guessing they probably figured out the little conundrum that they created in that. And it's just going to be, so I think that, we'll have an avenue if we're self-employed that's either going to be now or in a couple weeks. Hopefully it's not going to be not at all, because that'd be crazy. And then I think the self-employed, the 1099s, that's not going to be available to the business. It's going to happen at the independent contractor level, is what I would suspect would happen.
So the next question from the same person, from Joe. How are employees who have terminated employment to be handled? For example, excuse me, someone quit in November 2019 or even January 2020. How's payroll costs and FTE contribute to the available loan and eventual forgiveness assessment?
Yeah, so that was my Luke Kuechly example there, because you got people that left and then you got people that you would have added depending on facts and circumstances. So all that's going to go into your application submission. So let's say, this would be the scenario that you'd want to look at, is if that's a scenario where you get maximum dollars, which it probably would if your headcount was higher, where you get maximum dollars, but at the same time your FTE count is going to be a problem, then what I would do in that scenario would be to say, I'm going to use January through February to be my test period for the purposes of forgiveness, because I'll have a lower FTE count and might actually have a lower payroll number as well. And I would just make sure that I'm maxing the payroll number out to get the maximum forgiveness, just accepting the fact that there may be a little bit of debt that's left at the end, to try to get my math right. But they, the way it reads now is that they would be included in terms of calculating your average, because people are always coming and going. I'd seen a chat from Robert that said through March. Again, right now it reads through February, so March would not be included in the calculation of the request.
All right, cool. Let's see here. Oh, here we go. One more. Hold on.
Sorry, responding to my 12 o'clock, saying I'm going to be late.
Oh, there you go. Okay.
What's the next question?
Tell me if we covered this one. Can you please clarify if we can go ahead and apply for the 10K forgivable amount and PPP without any conflict?
Yeah, that was I mean, if you've already applied, yeah, we're just going to have to deal with it. If you have not applied, I would wait until you get PPP funds, use those first, and then go EIDL later.
Do you know if the form will be available in DocuSign with everyone working from home? It's going to be hard to get actual signatures.
That's a great question. So what's happening right now is that's really funny. I hadn't thought through that too much. But right now what's happening is that the SBA produced their example application, and then each bank is then tailoring that to suit their own purpose.
All right. Let's see. How are employees who have terminated employment to be handled? Yeah, we covered that. Had 2 employees that we were going to lay off before this whole thing started. Can we still do it now if we use our average? Uh-oh.
Yeah. Sorry, Amazon guy just came to the door, so the dog's. So you're planning on letting people go. What, can you repeat the question, Gary?
Yeah. Have 2 employees that we were going to lay off before this whole thing started. Can we do it now? If we use our average payrolls, it will be inflated to what's going to be in the future. How's that going to affect the program?
You know, that's kind of the equivalent of the question that Joe asked, which is, yeah, you can go ahead and lay them off now. They are going to be included in your average number. So what you're going to have to keep an eye on is how will that, you know, potentially negatively impact you. And by negatively impact you, it just means that you're going to have, you know, some short-term debt at a very low rate, and it's assumingly going to be a low amount, unless for some reason you get the head count back up by June 30th, such that the FTE count matches.
Okay. Can an employer HSA or HRA contributions or funding be counted as healthcare costs?
Well, if it's on the employee side, it's already built into their wage because they deferred it. If you're the employer, it's whatever your plan is. So if your plan includes HSA contributions, then I would include it in the calculation.
Okay. We're the U.S. subsidiary of a foreign parent. We have 450 employees in the U.S. However, our parent has several thousand. Would we still be considered a small business for the PPP, considering the affiliate rules?
Yeah, you're going to fall into the same category as the private equity firms in that case. So if that was Wolfgang, this is the answer to the email that you sent. So what I would do in that case is I would still reach out to the bank to see what their position is going to be on that specific issue related to affiliation. Because as I said, what I'd expect to happen, I mean, there's a lot of big foreign companies that employ a lot of U.S. workers that, you know, the whole point is to keep people employed. I would see them potentially waiving that restriction in the affiliation rules. Otherwise, you know, you would just plead your case to the SBA and hopefully get a favorable ruling for this purpose, which you can always do. Independent of that, you know, I would, if you didn't feel like, if you couldn't get the Paycheck Protection Program to really go anywhere with your bank based on them taking a stance on the affiliation rules, I probably would go the route of seeing if you could get a waiver with the SBA. However you can do that. And then at the same time, I'd be looking at the use of the tax credits that are available, which would be the employee retention credit, or the employee retention credit if you're having to furlough some people because you have a slowdown, or alternatively the Family Medical Leave Act credit available. So I still would try for something, but that's the order that I would go with. I'd see what the bank says. If that doesn't work, see if you can get a waiver. If that doesn't work, then go the tax credit route and see if you can get to a good answer.
Next question from Deborah. If I'm a sole proprietor LLC, do I qualify for the $10,000 grant and loan if I want to use it, and for unemployment with the additional $600 a week?
The way that it reads now, the answer is yes. So what you could do is you'd have to look at what's going to be the best. In theory, if the amount of the loan that you would have received under PPP is equal to 10,000. So here would be my decision point. If I ran the math on PPP and that amount was less than $10,000 plus unemployment, I would go $10,000 plus unemployment. If the amount that I receive under PPP is greater than $10,000 in unemployment, I probably would go PPP and hold off on EIDL.
Okay, this is from Kevin. Past client asked me if he can still apply for PPP given the fact that he already laid off his 16 employees 2 weeks ago. They've all filed for unemployment insurance. Won't the SBA see that as double dipping by the employees, the employer payroll from PPP and their own collection of unemployment?
No, because remember, you've got the test period, which would be calendar year 2019. And as long as they're rehired, as long as anybody that you let go prior to 4/27 is rehired by 6/30, you're fine. So the only gotcha that's going to happen for that person is that if for whatever reason, they can't resume operations or their employees won't come back, then they wouldn't have spent money on payroll and they wouldn't have the FTE count to support the forgiveness, in which case, you just would figure out how to get the money paid back. But you, in theory, wouldn't have spent it. Or your forgiveness amount would just be reduced pro rata, and then hopefully you would pay the rest of it back.
And I think this may be a typo, but this is from Jay. It says, can you use a W-3, I'm assuming it's W-2, for the year and divide by 12 to get a monthly average?
Actually, that was right with the W-3.
Okay.
You could, but it's technically incorrect. So that's what my team is working on now, is to figure out, can we get there from annual information versus monthly information, which is what my calculation has. So again, if your bank says, hey, give us all your information, and we don't really care what you put on that form, we're going to give you what we're going to give you based on our own calculation, I would put as little effort into this as I possibly as I have to get to the right answer. So that's what we're trying to get to the bottom of today.
Okay, cool. And then I think we've covered this, but I'll ask it anyway. Can you clarify if we can go ahead and apply for the $10,000 forgivable grant and PPP without any conflict?
You got the same again. Yeah, we covered that.
Yeah. I think those are the only, let's see here. Brenda gave us an example. It says allowed gross wages up to 100,000, SUDA, health insurance, dental insurance, 1099 contracts, IT, accounting, commission, sales reps, etc. Sales, state tax withheld from employee checks, FICA, workman's comp, 401k match. Those are allowed, disallowed. federal income tax withheld from employees' paychecks, wages over 100K, and 1099 contractors over 100K. I'm assuming Brenda wanted that just verified.
It's pretty close. You know, in this first go round, the 1099 contractors don't count. That would be the double dipping. And then the only other thing that I haven't seen anything that says that you would include workers' comp in insurance. I mean, I guess you could make a case for that because it's an imposed requirement, but I haven't seen anything that says that you would include workers' comp at this point. It's really meant to be health benefits. So,
all right, cool. Wow, you guys had some great questions, and Adam, you did a really great job in spite of all of our challenges, which hopefully we'll get past some of those. But I know that the bandwidth on the internet is just being stretched to capacity right now. Just think about this. We couldn't have done this 10 years ago, just with the infrastructure. So thank goodness we've got some of this going, and still adapt and overcome. That's really what we all have to do. So what we'll do is we'll probably edit the front end of this where we had some freezing of things, because Adam did a really good job towards the middle and the end of this thing in explaining the spreadsheet. We will post it up tonight on our YouTube channel. Just go to BGW CPA YouTube. Feel free to tell any of your friends or other business owners or business leaders that are grappling with this thing, because I think everybody in the country is. And we will be back on Tuesday at 11, hopefully with less technical difficulties. But thank you. And also, if you have additional questions that come in, send them to FAQ@trustbgw.com. Again, FAQ@trustbgw.com. What we're trying to do now is move those things. If you get them in by 1 p.m. that same day, what we're going to do is Blaine is kind of taking point and assembling that stuff, putting them into buckets, if you will, and then we'll publish them on our website. They'll be up by 10 a.m. the next morning, just because we're using a third-party administrator right now to help us hang stuff on our website. But there is a COVID-19 response section on the trustbgw.com website. So thank you for your time today. Appreciate it. Thank you, Adam. You did a great job. I really appreciate that.
Thanks, man. The last thing on the spreadsheet, just if you guys are looking for the spreadsheet, no, again, I believe it's correct, but things change daily. Just email Gary and he'll get it back to you.
Yep, sounds good. All right, guys, thank you so much.